DBGI continually moving to the upside, but it is presenting some mixed signals. Let's go ahead and go over those now. What is up, you guys? Thank you so much for stopping by once again on this fine Thursday night. This is ARCa coming at you with a DBGI technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, you guys, so we're going to start off the immediate short-term time frame analysis in the hourly chart here, particularly with the Crypstex ARC-Series indicators. Okay, so these are actually indicators that have been provided to me by Crypstex Trading themselves. They have since endorsed me or partnered with me so that I can use some tools that that actually pertain to my type of strategy, right? I don't even know how to put it to you, but they believe how I trade and they like it. All right, you guys, so we're going to take a look at first the ARC Armor indicator. So the Armor indicator is actually comprised of several exponential moving averages, which are actually placed very close in proximity to each other, algorithmically placed within the chart so that we could gauge this type of wave of motion, okay, or directional waves. So in doing so, we actually do get some pretty cool signals within this. So like, for example, here we get a short signal goes down, long signal goes up, we get a short comes down, long up, you know, and so on. So the reason why I'm saying this is, first of all, the indicators themselves are actually presenting long signals, okay? So the continuation to the upside is still, you can actually see that the curvature from red to green has happened and the moving averages are looking healthy, okay? So now also ARC Enhanced MACD, which is another one with within the ARC Crypstex series, you can actually see that the buy signal was actually flashed a little more aggressive than the ARC indicator. Okay, so this was flashed on December 21st, while the ARC Armor flashed it on December 22nd. Okay, so in this case, we do not have any type of sell signal just yet. Okay, so this is a good verification for a continuation to the upside. However, I have manually found a couple little other signals that may indicate a pullback, and that pullback may be actually short-lived. Okay, so let's go ahead and take a look at the next chart. All right, so we're going to go ahead and touch bases within this chart. So this is called a descending broadening wedge. Okay, so this wedge is usually a type of reversal pattern, a macro reversal in this case, since we're looking at it in the 8 hour. And it actually started in August 25th, 2022. So I guess we can actually, you know what, not macro scale, we'll just call it a large time frame. All right, you guys, so in this case, a few things to notice here. So we already have 4 tests of the resistance. Usually the 4th test is the true breakout attempt, but I have mentioned in very few videos in my channel that there is the opportunity to actually make the 5th test be the actual one to move to the upside. Okay, so in this case, we did face capitulation from the 4th iteration. It actually didn't even break out of it. It actually just sold straight off and it came back down to test the support once again. Okay, so in this case, we are setting up a few things that are actually leading me to believe that the upside continuation is absolute. Okay, but first we do have to notice that there are several things that we have to watch out for within the shorter term time frames, okay, such as pullbacks and all that stuff that can prevent us from actually making any gains on this. Okay, so first of all, we do have a right angled triangle here. Okay, so this right angled triangle or descending triangle is usually a bullish outlook. Okay, so this does have 2 price objectives. It has the price objective towards the downside and the upside per the playbook rules. Okay, so first of all, we can actually take that price objective by a trend line or via a trend line. So that trend line can actually be taken from the hypotenuse of the triangle, which is right at the top, and we lead it all the way to the support bottom of the triangle itself. Okay, so first of all, the downside would actually be since this was if the breakout happened to the downside, you can actually see that the breakout has you can actually see that the candle upon breakout would have direct confluence with the support bottom of this trend line. Okay, so we can actually just do this right here so you can just see how exact that is. Okay, so it would have led us down to here to test that support bottom one more time before a continuation onto the upside, but the trend line actually has broken up. The trend has actually actually broken to the upside. It did favor the upside. So in this case, we apply the trend line to that breakout point, and from doing so, we can actually see that the trend line has an absolute confluence, first of all, with the top of the top of this trend line here, the box, okay? But that box is actually a previous gap that we closed. Okay, so that gap was closed. I'll give you the dates right now. That gap was closed at the wick low of the wick low of Monday, November 10th, okay, November 7th, okay, and the following candle was also, this was actually the opening of this hammer candle here, and that was on November 8th, okay, so let's go ahead and make that, let's make that font a little bit bigger. For those of you who are looking on a phone, can actually see a little bit clearer. My apologies. Okay, so yes, we do see a top target, which is usually how this pattern is played out. Okay, so another thing to notice here is that it does have absolute confluence with the 2 fib located at, let's see, 561, right at 561 alongside the price objective. Okay, so the curious thing is that the 2 fib of 561 is and the 2 spot 618 at 618 shares a similar gap between the actual gap fill that we have back here. Okay, so definitely a strong area of resistance here. But another thing to notice here is that in shorter term time frames, yes, we have come back down to test our newly converted resistance into support, but in the 8-hour, we have not. Okay, so this could be a sign that we may actually look for a retracement back to test this and then a bounce and continuation onto the upside. Okay, so in this case, if we were to come back and test it in the 8-hour time frame, we can see a test of 393 or potentially at the 2 spot 236, 398. Okay, so another thing to notice is that we do have a very strong support at the knot 618 golden mean. So that is at $4.33. Okay, so we do have some downside to look forward to just in case this is going to follow the actual rules of the playbook. Okay, let's go ahead and move on to the next chart, as there is some more to talk about. Okay, so first of all, the upside for DBGI was absolutely in accordance to these hidden bullish divergence drives. Okay, so these are actually particularly let's see, 1, 2, 3, 4. Yeah, so this is about 4 drives of phantom regular bullish divergence. Okay, so that bullish divergence is actually created when price action is making a series of lower lows, and the momentum, in this case represented by RSI, relative strength index, is making a series of higher lows. Okay, so that price opposition between momentum and price action is the divergence that we're looking for. Now, what you're looking at here with these two trend lines right after, in the next 12-hour candle that printed literally just today, that actually confirmed 2 drives of regular bearish divergence. Okay, so that happens when momentum is making a series of higher highs and price action is making a series of higher lows. Okay, so we do have 2 primary drives of, actually 1 primary drive of phantom regular bearish divergence, and this is 1 drive of regular bearish divergence. Phantom, why? Because it actually has to cross price action to get from point A to point B. Okay, you guys, so for the new viewers, know that this pink line is the 14-day moving average, which is standard to any RSI setup, and the purple line represents the RSI signal itself. Okay, so let's go ahead and open up the multi-pane here so that we can finish off this analysis and move on. Okay, so sorry, let me just go ahead and move that out of the way. And now I'm going to load a 30-minute immediate short-term time frame. Okay, so we're going to look at the short-term, we're going to look at the bi-hourly, 6-hour, and the daily. So for the new viewers, I do have the RSI properties on a diagram here. Pardon me. So the RSI properties are actually for us to know the position where we are within the RSI. Okay, so in this case, you can actually see that the moving average is still below us, which is very bullish, and is still suggesting a continuation to the upside. Now, whenever we're in the very shallow areas of either zone, in this case, we're in the very shallow area of the overbought percentile, the likelihood of being brought back into the prior zone gravitationally is likely. Okay, so or is great. So we have to watch out for that, and it is approaching it's using the moving average as support, but it's going to use it again as support. So as long as we do maintain ourselves within this shallow area, that pressure to the downside is pretty great. Okay, so now let's look at the bi-hourly RSI. So the bi-hourly RSI is actually right at the junction between the bull strength percentile and the overbought percentile. So in this case, again, you can actually see that while we were in that shallow area, we got gravitationally pulled right into the junction of it. So the likelihood of coming right back into this area here is great. Another thing is that the moving average, yes, it is below us, very bullish, but it's also very far away from us. So we would need this to catch up so that we can use it as a form of support before a bounce to the upside. It's kind of like what physics call as the Browning effect. I believe that's what it's called. Particle motion or particle bounces, right? So in this case, the 6-hour time frame is also right at the junction between the bull weakness and the bull strength. Okay, so again, as long as we do maintain ourselves within this shallow area, that gravitational pull is likely. All right, so now let's look at the daily, actually not the 12 hours, since we already saw the divergence chart. So the daily is literally where I am favoring the upside. Okay, so first of all, we are looking at a potential pullback, a short-term pullback, which could be in alignment to what we're talking about here. That pullback can happen either to that the not 618 at 433. The second likelihood could be at the not 236 at 398, and of course our newly converted resistance into support, which is located at about 390. Okay, just to be safe. All right, you guys, so now let's just look at the bi-daily. It should be upside. Yeah, bi-daily is suggesting upside. So there is a multi-day upside coming up, but we are going to face some type of small retracement in the immediate short term. Okay, you guys, so please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, I need you to do your own DD and everything will be just fine, you guys. If you have any questions or concerns, don't hesitate to reach out to me, as I am available on Twitter and Discord. I'll make sure to leave those links in the description below for you to consider joining that the ARCa trading community. Okay, you guys. But yeah, I think that's just about it. I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.